Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 30th of November here in 2021. And we had a big sell day. Big sell day is in 1.5% in most of the markets, but we'll take a look at gold, which doesn't look that much on the percent change. Oil does, and the bond market was up. So that's our focal points in today's session. The headline news was, of course, what most of us already knew, which is the inflation. Look at that. Is here to stay. So we knew this. The Fed announced it, or at least Chair Powell did in his testimony today, and his main comment was we may have to drop the line about transitory inflation. Again, market participants, us and TheoTrade, were aware of that, but it's good to hear that confirmed from the Federal Reserve Chairman himself. And that does put us into another position, or puts us into a new stage where the Fed is acknowledging the push of the upside of inflation on asset prices. Of course, that includes oil, food, and other commodities. We've seen this for the bulk of 2020 and into 2021. But that's one half of the headlines that sent the market down. And I know it's a big down day, trend day to the downside. But in looking at the percent change, might not feel like a lot, but we'll talk about that in a minute. The other side was the Omicron Delta, or the variant for COVID. So we'll leave the pandemic talk off the table, but just know that that is a headline. And one of the things that sparked the selling in the morning was the chair of Moderna talking about we may need to make a little changes to the vaccine. So that, again, that off the table. Those were the headline news or headline events that created or perpetuated or resulted in some sell side activity from an overbought market. And I like to call these rubber band snapbacks or pullbacks. They're just phases in the market where the market doesn't go straight up. So a trend, even if it's an uptrend, will make higher highs and higher lows. That's just trend structure that occurs on any stock or any ETF. When the market's overbought, particularly as overbought as it was earlier in April and now September and October, good things don't tend to occur to the market participants when the market is this overbought. As we like to say affectionately, the market takes the escalator to the upside and the elevator to the downside. That is going to give rise to put strategies or any type of risk control, risk mitigation, vertical spreads, anything else on the put side. The frustration is the creep to the upside, the reward, and that's the risk for playing to the put side. And of course, the reward is the 1 or 2 or 3 days, sometimes more, where the market takes a steep downside move. And that's more true in the Russell. So looking at the Russell index, we've had these levels. We'll put this on the bigger perspective. Roughly speaking, I like to keep things simple, about the 2300, 2350 upper resistance point. Beneath that is about 2100, 2150 lower bound of support. Think about this like a distribution, like a little bell curve, or like a profile, where this is the overbought or the expensive portions of the tape of the market, and the middle part is what we might call fair value, and the lower point is beneath or under fair value. Most of the time, the markets play into mean reversion. Most of trading strategies and things that we do in TheoTrade are based upon profile distributions, selling premium at certain times, buying premium at certain times, and ultimately fading to play for the mean or the price to come back to the mean. That's also true in trending environments, but that can be a little more, take some more time for that mean to revert. And in an uptrend, we still have that mean reversion. It's just increasing. So think of it like this. Think of this as a sideways channel that we saw in the Russell. And the same logic could take place in the S&P or the NASDAQ, which is having these up and down swings. So here's the top, here's the profile. Think of it like a little volume or distribution. The same thing takes place here. Interesting profile, but nonetheless, the overbought is from the top and the oversold or the downside target is beneath. How does this play into positions? How does this play into what we're doing on the short term and the swing basis? Well, we know the market's overbought. We know the market, if we quantify it from a perspective, get everything else off the chart, of linear regression. That's an easy way to speak the same language. So what we'll do is put a linear regression channel 150 and just note the structural or the highs and the lows. The top of the band could be considered overbought or at least a sell. And of course down at the bottom, the red or the blue can be considered objectively underbought, undervalued, and from the long side. We are pulling down from overbought. And when the market goes up to these top bounds, it does tend to go lower. That makes perfect sense. Now, I have a little plan. I have a potential drop zone in the market, and that is right here. So let's be very aware as we go into December that the market is poised for another potential sell swing to the downside. And it may or may not go all the way to 4,300. In fact, it might just go to this 44 or 45, 44 and 500 or 44.50, this print right here at the lower bound of the linear regression. Now that's the S&P. Let's look at the other markets. Here is the NASDAQ. And we do see an interesting component amidst all of the selling in today's session. Again, the headline news, inflation is here to stay, and the Federal Reserve acknowledged that. And we have more news about things about the coronavirus. And that has led the market to pressure to the downside. But there is one standout, and that one standout is Apple. I'll sneak in a comment about Pfizer because these were the leading stocks in today's session, was actually Apple and Pfizer, and that was just about it. Tesla snuck up a little bit higher, as did Merck. And those, again, are vaccine stocks. A little bit of a play on the vaccine side of the market, or at least biotechnology, pharmaceuticals. And Apple is just a large cap stock. In fact, it's the largest stock in the S&P. But in the NASDAQ, that led the NASDAQ to be a little bit stronger. I know down 1% is not strong, but it wasn't down 1.5, 1.6, or 1.25. That is in part because of the strength of the leadership and the market cap of Apple. And that is, I was doing our scan. That's not actually a new all-time high, but just technically it's a new closing high. Nonetheless, Apple remains in a positive uptrend. So that's the play here in the Dow Mini Futures. We see it all the way down at that lower bound of the linear regression. What does that mean? That's the thought process. That's the potential future, at least in terms of playing short term. And I like to play short term trades. I don't play month duration positions. Just where is the next swing? Are we likely to continue going higher or pull a little lower? So losing the bounds here does open up the sell side pathway under 4,500 toward 4,450 and maybe even lower. But the Dow Mini Futures or the Dow Jones has already achieved that. So that's maybe looking at the future of the S&P should the market continue falling lower. I don't see the Russell as a trend. The Russell is more sideways, and that's the structure for the Russell. Outside the market, we are looking at the bonds, and that's TLT, which pushed up to a new swing high. Just like the Russell, this is not in an uptrend or downtrend. It's in a sideways trend. And that makes about 152 the upper bound of that distribution. Again, that think of it like a profile distribution, like a little bell curve. And the lower bound is about this 142 or 143, midpoint being about 147. This allows you to structure out some trades, potentially puts or being bearish, into the top of the range, using the midpoint as a target, or maybe even all the way down to the lows. Of course, that is just using your price levels to mitigate risk. And any breakout beyond that would be a stop, or would be a significant new event that we'd be watching in the bond market. That's TLT. We'll take a look quickly at ZN, which is, we still have that linear regression. We'll take that off the chart. And that is more in a downtrend than the TLT. ZN is your 10-year Treasury note. ZB is the bond. That's your 30-year Treasury bond. Outside of that, we can look at the other mode and look at the yields. 10-year Treasury yield is TNX. This is your interest rate. This is your yields. Similarly, I think it's best described as a trading range as opposed to a trend. It has been sideways between this is actually 1.7%, and right here is about 1.2%. That's not 12 and 17. That's 1.7%. 12%. And of course, we are interested in any push into 2% or back down to 1%. The interesting market, to me at least in today's session, which went just the opposite of what I would expect the headline to be. Inflation is here. Gold will go higher. It did not do that. In fact, gold on that early morning testimony, and the market today at least reversed. So that was the testimony. That was that statement about we, the Fed, Federal Reserve, will acknowledge that we should probably remove the word transitory to inflation. But again, gold is in its own chart, its own parameters, and we'll go back to the daily chart on gold. It's just a trading range. It doesn't make sense to me. There's no explanation at the moment, but just within this context of distributions, profiles, and bell curves. Mean reversion. What does that mean? What is the logic? What's trades? Same thing with the Russell. Same thing with the bond market. Most of 2021 for gold, this is GC, the gold futures, has been spent going sideways, just like the Russell. That means your upper bound is about 1800 in the gold market and about 1725, 1750 to the lower bound. This sets up trades again to play the put side from above the fair valuation, or long or bullishly from beneath it. One more note before we go. We've shown these stocks making new 52-week highs. But these, and the market pulling to the downside, these are the names leading us to the downside. They would include, I sort by market cap, this is new yearly lows in the S&P 500. Just naming a few of these stocks before we go would be MasterCard. That is 2021, and that is a new 52-week low. Disney, which continues to be on the sell side, still making these lows, still pushing the gap to the downside. It did break out of the range, 170 to 185, 190, and that has perpetuated additional selling in this stock, and it's generating new 52-week lows, or new lows not seen, for the better part of 2020. These are weak stocks getting weaker. PayPal is on that list. Verizon Communication continues to make new lows. These are short candidates. AT&T, which continues its downswing, had a downtrend session this whole day. Medtronic, T-Mobile, and Bristol Myers Squibb. One more note, and you can scan this on your own chart with the new 52-week lows or new yearly lows. This is going to be load scan query, public, new yearly lows. You can put this on your own chart or put this on your own scan. You can scan outside the S&P, scan weekly options. Other stocks of note would include Amgen and Twitter, which made new lows as well. This is a serious situation. All sectors were in the red today. Volatility has picked up. VIX was up, as was the VIX futures. Bonds were up, markets down. Crude down, gold down as well. Be careful, be safe, be hedged, and think about the risk. As always, this is Corey Rosenlund with tonight's Theo video update for November 30th, 2021.